Let's now look at our last topic before disclosure, short-term leases. We've touched on these very briefly early in the series, but let's now cover them in greater detail. To begin, ASC 842 is very clear on what it considers to be a short-term lease. The definition in the standard states that a short-term lease is a lease that, at the commencement date, has a lease term of 12 months or less and does not include an option to purchase the underlying asset that the lessee is reasonably certain to exercise. While judgment is required when determining the lease term if a renewal option is present, or whether we are reasonably certain to purchase the asset if that option exists in the contract, the 12-month threshold itself is a bright line test once the lease term has been determined. 12 months or less qualifies as a short-term lease. 12 months and 1 day does not. Then in paragraph 842.20.25.2, the standard provides a practical expedient for short-term leases. In its entirety, it states that as an accounting policy, a lessee may elect not to apply the recognition requirements in this subtopic to short-term leases. Instead, a lessee may recognize the lease payments in profit or loss on a straight-line basis over the lease term and variable lease payments in the period in which the obligation for those payments is incurred. The accounting policy election for short-term leases shall be made by class of underlying asset to which the right of use relates. So for a short-term lease, we do not record a right of use asset or a lease liability. But there is one important point to highlight here. We don't simply expense the cash payments as they are incurred. Instead, we're required to recognize lease payments on a straight-line basis over the lease term. If the cash payments are leveled throughout the lease, the expense will match the cash each month. But if the payments change over the term, or the lease includes prepaid lease payments or initial direct costs, we need to track and smooth total lease cost over the lease term. For example, if we have a 12-month lease that includes a $3,000 payment pre-commencement, and the first 6 months are $1,000 per month, and the final 6 months are $2,000 per month, we'd recognize short-term lease expense of $1,750 per month over the lease term, calculated as the total consideration of $21,000 divided by the 12 months. Next, paragraph 842.20.25.3 addresses what happens if circumstances change. It states that if the lease term or the assessment of a lessee option to purchase the underlying asset changes, such that after the change, the remaining lease term extends more than 12 months from the end of the previously determined lease term, or the lessee is reasonably certain to exercise its option to purchase the underlying asset, the lease no longer meets the definition of a short-term lease, and the lessee shall apply the remainder of the guidance in this topic as if the date of the change in circumstances is the commencement date. So the key point here is that even if the total lease term ends up being longer than 12 months, we do not automatically lose short-term lease treatment. The change must cause the remaining lease term to extend more than 12 months beyond the original lease end date. For example, assume we have an 8-month lease with a 12-month renewal option, and at commencement we determine we are not reasonably certain to exercise that option. If we elect a practical expedient for this asset class, we can account for this lease as a short-term lease. Now assume that after 4 months, we notify the lessor that we will exercise the renewal. Even though the total lease term is now 20 months, we can still continue to account for the lease as a short-term lease, because the remaining lease term does not extend more than 12 months beyond the original lease end date. However, If the renewal option had instead been for 13 months, that would no longer be true, because the remaining term would extend beyond the 12-month threshold, and we'd need to record this lease and apply the full ASC 842 guidance, with a commencement date equal to the date the circumstances changed. And that covers the core concepts behind short-term leases. In the next episode, we'll set up our workbook to track a short-term lease and see how this works in practice.